Hey, hello everybody. Hi, my name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and today is Friday, ladies and gentlemen. By the way, this is a quick video preview for the webinar, which is going to happen in a few moments, so do not tune out. We're going to talk markets. We're going to have a look what happened this week. This week we had a busy one. It was a central bank week, but we're still in the Middle East tension period right now. So look, we're going to talk about all this and a little bit more. Stay tuned. Hopefully you'll enjoy the session, and I'll see you in a bit. All right, ladies and gentlemen, hello, and good morning. Well, good morning to me. Good morning to everybody who's in my kind of zone here. I'm in Europe, but good afternoon or good evening already for the Asian side of the world, and of course, good night. I would say for the American side and there for the North and South America. Look, ladies and gentlemen, in general, hello everybody, wherever you are. Thank you very much for watching this. Thank you very much for tuning in. I really appreciate that. I cannot really express my gratitude and a lot, or what's the word for that? I cannot really express that much my gratitude, how much it means to me that you're tuning in. Ladies and gentlemen, thank you very much. Like I said, my name is Darius Anucauskas. I'm the Chief Market Analyst here at Markets.com. Look, we're going to talk markets as usual. This is a session where you can jump in. Of course, also you can drop your comments, drop your questions if you wish. Feel free to do so during the live session. If you're watching this as a recorded session, also feel free to drop a comment in there somewhere. I will then try to respond in my next video. But ladies and gentlemen, welcome everybody. We made it to Friday. It is Friday, so yes, hopefully you're all feeling refreshed and relaxed, right? Of course, I'm joking. Of course, no, we're looking towards the weekend to get refreshed and relaxed. But anyway, look, before we jump into the markets, as always, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. I'm just gonna put my usual good morning in the chat room. There we go. Just a second. Good morning, everyone. So I hope everybody's, like I said, having a wonderful start for Friday. Also, just before we jump into the action, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, let's have a look at the markets now. Actually, you know what I want to pick? You know what? I'm going to keep on the cash indices because I wanted to pick up on maybe the main ones. But you know what? I'm going to stay on the cash indices for now because the U.S. was closed yesterday. So, but there was the futures were still moving. So, look, with Nikkei, actually, I'm going to jump into the main index here. So, look, Nikkei had a good run initially. But my problem is, and I'm going purely from the technical perspective, is the weekly candle and is this issue right here. So we basically closed below the neckline which I was talking about, which I kind of informed you about. This is basically the inverted head and shoulders pattern, as you can see here. Beautiful picture here. In general, this should be more of a bullish indication, but okay. The market is doing what it needs to do. Like I said, we're looking at this inverted head and shoulders pattern. What my problem is that we see the weekly candle here eventually staying below the incline, the neckline, which is with an incline, which is basically this trend line that's coming across. So like I said, for now, what I'm going to do here is I'm going to take this as a very careful approach. Look, we still have 1 week left of June. Next week, we're going into the last week, and this is where the interesting bit now comes in. So if this week's candle, body of the daily candle, remained below the neckline, um, then of course it's becoming tricky going into next week. Maybe we'll go higher, I don't know, but this is, like I said, it would have been a little bit easier if we would have stayed above, if the body would of this weekly candle would have stayed above the neckline. But now what I'm keeping an eye on is the monthly candle, and like I said, going into next week, we will see. Of course, Monday is the last trading day of June, but I think that Friday will be the decisive one. Anyway, long story short, for now, watching this carefully. And am I getting very bearish? No, not yet. Not yet, because on the day I'm looking at the daily chart, and I need to see that drop below the 37,540 zone, somewhere around here, in order to get a little bit more excited with the downside. At the same time, a drop below all my EMAs here on the daily chart could happen, and this is where more sellers could join in. So that's why I'm leaving this whole area just for the sake of it, just to keep an eye on it, and yeah, then I'm gonna do something about it maybe. Look, in order to confuse you a little bit more in terms of technical scenarios here, I do want to throw this one out because I think that it needs to be mentioned. Let's say we get ourselves something of a rising veg pattern. Now, if that's the case, of course, such patterns tend to break to the downside, but a confirmation break below the lower side of the rising veg is needed. However, if we do break below it, then we have an obstacle, this one, which I talked about. So that's why I'm still going to end up, even if it is a rising veg, I will still remain somewhat bearish, only if we do drop below this 37,540 zone right here somewhere, and then we'll take it from there. So that's my game plan here for the Japanese index, for the Nikkei 225. I know it could be a lot of things to take in, but hey, let's be a little bit more on the careful side. Look, this week we had a busy one in terms of central banks, and the Bank of Japan was no stranger to this. Where's that? Bank of Japan interest rate decision Tuesday. There we go. They kept the rate unchanged at plus 0.5. Okay, look, it's fine. Don't get me wrong. It's still, it was as expected. But let's see what's happening this morning, because this morning we got some data, early hours in the morning, inflation numbers. So a little bit lower year-on-year figure. The headline year-on-year 3.5, lower than the previous 3.6. Okay, core inflation 3.7, a little bit on the higher side than the previous. Interesting, very interesting developments here. But you know what? I think that everybody needs to, and I keep on saying this, and I apologize for repeating this over and over, but I'm really curious about the June inflation number. Now that's where the interesting bit comes in, because honestly, with the jump in oil that we saw this month because of the tensions, I really, like I said, I'm really interested how much of a deviation we'll have, from the previous figure. So long story short, so the May figure came out at 3.5. The headline came out at 3.5, a little bit lower. So in a way, it kind of does not support further rate hikes here. And also the fact that the Japanese yen is on the stronger side, excuse me, because the Japanese yen is also on the stronger side, it really also, like I said, doesn't really support further rate hikes from the BOJ. Unless the Japanese yen starts devaluing rapidly because of maybe a rising dollar, but then you have to have like a very good situation in the equity world, because it would be risk on. Everybody would be jumping back into stocks, not into safe havens, and yeah, then like I said, then you would need to go and hike more rates. So I think that this is a good opportunity for the BOJ, just kind of chill, not do anything, just to kind of justify that, hey, we keep on monitoring. Inflation is like stable. Yen is on the kind of a stronger side right now. So there's no, like I said, there's no point of jumping in right now with some sort of like interest rate hikes. So coming back to Nikkei, we are, like I said, we are seeing a drift lower. So my position. I just explained it to you. So I'm watching this. I'm watching this neckline. I'm watching the monthly candle now going into next week. Sorry for the little mess here, but I'm also, like I said, keeping an eye on the daily chart, and especially if we do start falling lower here and we fall below the 37,540 zone, somewhere around there. If we do that, well, a little bit of a move lower could be possible. Let's jump into China. China is still moving, and looking at this picture here, yes, we're stuck. And I talked about this. I'm not going to say anything else. I mean, in terms of economic data, China has been somewhat on the quiet side this week, in my opinion. I think that at the moment they're not really, they delivered already all what they could. Loan prime rate came out on Friday, so like I said, that's why my heading is the central bank took the spotlight this week, because a lot of central banks came out this week, that, and I think that this is, I know the geopolitical tensions are also, they do matter, but you know what? I think the market also kind of is trying to keep its head cool and trying to understand what's the problem in general with the general economy. Now, China kept its interest rates the same. So the loan prime euro rate 1 year, it was dropped last time in May, and now they decided to keep it. So I think that everything is in line. I think that they're, they don't want to shift this too much here or there, because what they want to do, in my opinion, they want to wait for maybe a bigger shock. Because is there a drop in demand in China? Yes, there is. I mean, are they trying to fix it somehow in other methods? Yes, they probably are. Do they want to go and straight away use interest rates to fix the issue? I don't think so, because they can still try to fix things in other ways. So interest rates could be this kind of last resort in a way. So that's why interest rates are becoming more of a, at least for in countries like China and US and Europe, European Union, well, not a country but the union of countries. But anyway, that's what I'm saying. So you're trying to kind of have the status of the interest rates like elevated. You want to keep that like as if it's like the last resort, because we know that some countries which are experiencing, let's say, higher inflation, like Turkey, for example, that they can maneuver with interest rates very quickly, and that's how sometimes the perception of the interest rates in that country kind of changes. It's like the same. It's always moving and blah blah blah. So that's why they're trying to keep things stable. I'm talking about China, and they're trying to keep things stable, trying to not to play around with interest rates too much. So that's why for now we're watching this carefully. Of course, if we see some sort of a shift, because so far it just kind of remained flat around 3%. They dropped by 0.1% in May. So far the index here is reacting mainly to developments in the global arena and what's happening there. Because look, of course, the tensions with Iran, yes, that's not good. And I don't know, from in order to kind of support Iran, I think that China should have some sort of an say in this, because China has been the biggest buyer of Iranian oil, which is cheaper, and I don't think that I don't think that China would like to see Iranian oil kind of freely floating in the market. So, but again, you cannot really have Iran kind of destroyed, because you need you need their oil still, right? If there will be a new player in town, then new leadership in town in Iran, then that's why it becomes a little bit tricky then to purchase like cheaper oil. So that's why I think that China could, well, in a way, should intervene, have its say, because again, cheaper Iranian oil is way too attractive and way too big of a thing to lose. And and again, with higher oil prices, the Chinese goods become more expensive. Then the tariffs also are maybe hurting a little bit. So everything is, like I said, everything is kind of working out in that sense, in a way to maybe try and hurt China. However, like I said, that's why I think it's in their interest to intervene a little bit to calm the things down with Israel and Iran. Let's see. This is just a theory. Let's see what happens. And for now, the China 50 index is kind of in this waiting mode, as we can see. So it's waiting for something a little bit bigger, I think. But at the moment, yeah, we're being very careful with everything. ASX 200, there we go. We had a nice little retracement. I talked about this little hurdle, this 8,455 territory. There we go. Beautiful, nice decline. And yep, we found good support. So this is where I said that from here, I will consider a move lower. And look at this, almost bang on a beautiful test of this area, to this territory. So if we do drop below it, then my next target is the 50-day EMA together with a 23.6, and then we'll just take it from there. Let's jump into the US, ladies and gentlemen, US, but for that one, let me just jump into the cash index actually. The US, we saw yesterday that risk off environment where everything was just kind of, not collapsing, but everybody was fearful. Everybody was very fearful, and everybody was just kind of, afraid that if the U.S. intervenes, then the market could actually go lower. Apart from, of course, a few companies, like RTX, then CO, I think, no, and EO. Where's that? Where was the company? Thorpe Grumman, there we go. NOC, that's the ticker. NOC, of course, and companies like LMT. So these could enjoy the profits. But look, for now, what can I say? For now, the index is retracing back up. It seems like that, and I'm talking about the cash index. And we're waiting for that clearance above this 42,000 kind of 900 zone. On the cash index. If we can do that, then we'll have ourselves a nice inverted head and shoulders pattern, which is a little bit on the what's the word for that? A little bit on the complicated side. I mean, we have only one left shoulder, and then we have two heads and two right shoulders. So it's not a very textbook perfect inverted head and shoulders pattern. So in a way, maybe it couldn't be like one, maybe it's something else. But look, for now, I'm sticking to that idea. I'm not really bullish or bearish at this point. We're kind of oscillating around all my EMAs here on the daily chart. So I need to see a push above the 42,900 zone in order to go a little bit higher. And then I'll go from there. For the downside, a drop below my EMAs could open the door to some lower levels, but there are these two obstacles, the 41,165 and 40,650 levels, which could be a little bit in the way. So that's why I'm not really in a bit of a rush here. S&P 500 very quickly. Also, I think that we need to take a very conservative approach here and wait for a push above the current highest point of June near the 6,069 level. And then we could go for the all-time high, because we're not far. We're really not far, and I think that this is what the market would love to do. For the downside, well, my preference is on drop below the 5,786 territory right here, and then we could go from there. NASDAQ 100. Look, this one's a little bit messy, and let me actually remove all the drawings, and I want to start fresh. I will bring back a few levels. Like for example, this all-time high near the 22,241. That's on the cash index, by the way. On the main index, I think it's a beautiful 22,222 level. So again, the same story. Let's keep an eye on the current highest point of June. If we clear that one, then I'll go to the all-time high. Simple as that. For the downside, a drop below this little hurdle here, this 21,445. Yep, could attract a few more sellers into the game. So we could then aim for my EMAs here on the daily chart. But look, to support the upside scenario for the NASDAQ, if you want to look at the EMAs, and you'll see that we have a beautiful structure here where the 50 crossed the 200, then the 100, and is now above everything. The 100 is above the 200. So in a way, this is looking like a bullish scenario. If I'll introduce also my instruments here, my indicators here, the MACD and the RSI, well, with these two, you'll see that the MACD is showing a slowing upside momentum, and with the same story with the RSI, but we're still in positive territory, or not in positive, but above 50. On the RSI, and with the MACD, yes, we're the MACD is below the zero mark, but and these moving averages here are drifting to the downside a little bit. So we're seeing a little bit of a slowdown in momentum. I think that we're waiting for the next catalyst. So, but again, I'm removing the indicators because they sometimes can mislead you and can sometimes kind of cloud the judgment, which maybe you have the correct judgment, but you're looking at the indicators, you're thinking, wait. So you need to kind of balance that out a little bit. You need to be very careful what you're using and when you're using. So in terms of economic data from the US, of course, the main one that we got was the interest rate decision from the Federal Reserve, and this is where the Fed kept the rate unchanged as expected at 4.5, so basically in the range between 4.25 and 4.5. But what was interesting, and this is what I was talking about in one of my reports yesterday, that yes, they came out with it seemed like they came out with some positivity. They see that uncertainty has diminished, but it remains elevated. I mean, you're trying to please both sides in a way. Like, you're trying to please, especially the White House. You're trying to please the White House because you didn't give them a cut, because that's what they were asking, but you didn't want to give a cut, and which, to be honest, I think it was a good decision not to go for a cut. However, because again, inflation is a little bit tricky, and there could be some issues with inflation later on. As I said, like, keep an eye on the June report, which is going to come out in July. And what was interesting, that they have changed their projections, their interest rate projections for the first year, second year, and the current year. So this year 3.9, so as expected at previously. So basically they're still hoping to see. Where's my CME Fed Watch tool? So there we go. Let's put it in here. So they are still expecting to see 3 rate cuts here, as you can see. So this is the median, basically. This 3.9 here. So it's in the range in here between 3.75 and 4. So we're still there. So they're still hoping to see 2 cuts. I don't know, honestly. I somehow doubt that, because if oil remains elevated, if we continue to see these tensions between Iran and Israel, then we could see some blocks of some seaway passages, and that could limit the trade. So yeah, I mean, That's why I think the Fed is staying calm, and they understand that they probably we will probably see inflation on the higher side, and this is what they actually did. They reiterated that they expect inflation to pick up a little bit. So for the first year, next year, they're expecting a higher interest rate. So previously they were basically not a higher interest rate, but less cuts. And the same story in the second year, less cuts. So basically, initially that we from the March expectations, you can see the difference here. We're more towards the upside. So how can you be all positive about everything if you're actually doing these, reiterations that you're thinking that interest rates will actually not go down as much because you're thinking that probably inflation will pick up, right? So, but what I'm saying is, like I said, they're trying to, you're trying to please everybody. You're trying to keep the market calm, not to panic too much, and that's the kind of the game here. Okay, let's play the game. At least we know how we can play it, roughly. Yeah, we'll go from there. In terms of other economic data from the U.S. this week, let me just double check. NY Empire State Manufacturing Index came out lower, much lower, so that was a bit of a bummer for the market for the U.S. Then we got retail sales figures, which came out in the U.S. There we go. We're on the lower side, so that was not very good, not very pleasant, I would say. Industrial production year on year lower. There we go, 0.6. So everything is kind of manufacturing was also lower. So everything is kind of in this problematic state. We can see that the 30-year mortgage rate has been lowered quite significantly. Actually, I think this is to boost demand for mortgages and to boost maybe construction as well, or to keep construction at the same at least level, but just so that there wouldn't be an oversupply of housing, and this way or actually not, oversupply, basically, where it could push current house prices lower. So this is something that we're keeping an eye, of course, as well. Building permits preliminary, so these declined. Housing starts also dropped, as you can see here, on a month-on-month basis. Initial jobless claims came out as forecasted, but lower than the previous. Continuing jobless claims, were those continuous jobless claims, initial continuous jobless claims, there we go, increased from the forecast, sorry, but remained below previous. And then Thursday, what did we get Thursday? Not much. Friday, let's have a look. What are we getting Friday? Philadelphia Fed Manufacturing Index. Now this is going to be quite an interesting one, to be honest. At the moment, expectation is for a better number, but if we get a surprise, let's say the same as previous or close to previous, let's say we get -3, that's still bad. And then the CB leading index month on month, so something maybe to keep in mind. Fed's balance sheet also coming out. So look, in general, the economic data this week did not really, present something good. And I think that given that this morning, what I've heard on the news, that they decided to, U.S. decided not to step in for 2 weeks at least into Iran. That kind of maybe gives a little bit of hope for the market. We could, bounce back a little bit. Maybe we could see some more positivity. However, we are still very careful, very cautious, and we're very much alert to what's happening. And of course, going into next week, let me just have a quick look in terms of market. In terms of economic data from next week, the U.S. S&P Global, the flash manufacturing, S&P Global Manufacturing Composite and Services PMIs are coming out from the U.S. Then house pricing, CB Consumer Confidence number. Now that's going to be the more important one. And also going into Wednesday, we get the MBA, again, the mortgage rate, new home sales, blah, 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 the same stuff. Right, of course, how could I forget the the PCE figures, which are coming out on Friday. But Chicago Fed National Activity Index, so durable goods orders, yes, yes. And we have a bunch of like pending home sales, like smaller data here and there from the US. But then, yeah, the main one is going to be the Fed's beloved inflation metric. So that's where everybody's watching, and I think that's why Friday, as I said in the beginning of the show, Friday will be the more interesting day, and even though we have still another Monday to go through up after next week. So yes, the last kind of trading day of June is going to be Monday the 30th, and but I think that, like I said, Friday will be the more interesting day. Let's see, of course, let's see. Anyway, coming back to the situation here, long story short, I am waiting, and let's see what's going to happen here. And in general, I'm still having a little bit of an element of the doubt that nothing major will happen during the weekend. I think that there could be something happening. So I still strongly recommend everybody, if you have, for example, positions open, and look, if you can afford to keep them open, be my guest. You know, do whatever you feel you're comfortable with. It's just that I'm saying that from my side, I don't like to expose myself to potential shocks which come during the weekend sometimes. And if we suddenly see some sort of craziness happening during the weekend, and most likely we will in the current circumstances, then we could see some shocks here and there. So just keep an eye on this one. So I would say just, be careful, be cautious, and everything will be fine. Let's jump into the US dollar index very quickly. So beautiful hold up from the technical perspective. Downside line playing a fantastic role here. This downside line is taken from the highest point of February of 2025. So yes, look, as I said before, I'll say it again, I am bearish as long as we remain below this downside line. That's it. Of course, we came once again to test the downside line, and somebody might say, but hey, maybe we're forming something interesting here. In a way, we're always forming something interesting, but let's not forget that for now we are still holding above this 97 territory, 97.28, 25 zone, somewhere around here, and we're also holding below the downside line. Now, I just had a little idea just to see if this is kind of working out nicely here. Yep, something like this. Something like this, basically. Maybe this is a falling channel, and if it is a falling channel, then we look at the prevailing trend. The prevailing trend was to the upside, so maybe there is a good chance for this one to break out higher if this is a falling channel. If it's not, if it's just something that maybe just coincidentally happens, well, we'll ignore that. But either way, even if it is a falling channel, I would say still, the trend remains to the downside. So as long as the sides of the barriers of the falling channel remain intact, then we could still drift lower, because that's the current direction. So just be careful. But again, as I keep on saying, for me to get a little bit more comfortable with the downside, a drop below the 97.28, 25 zone is required. Let's jump into Europe. The German index DAX. Look at this. So what I wanted to actually do here, I want to remove everything and have a fresh look. Now, first of all, after we hit the new all-time high here in the beginning of June, we look at this. We hit the 24,486 zone, and we started retracing. So let's see if we did the 23.6. We measured from the lowest point of April to the highest point of June. Boom, fantastic, 23.6. That's what we did. And now the question is, are we going to stay above the 23.6, or actually we're going to drift lower? Well, pretty straightforward. You just have to wait. Don't be patient. Of course, to support the downside, the fact that we're struggling to get back above the 50-day EMA here, shown as the green line, that's of course is a bearish indication, which opens the door towards a possible move towards the 100-day EMA. For the upside, I would say look, maybe a push back above this 23,286 zone, which is also the near the 50-day EMA. If we push back above this area, maybe we could see a nice push here back up towards the 24,486, and then we'll go from there. So that's my game plan here on the DAX. I'm not really going to improvise here too much. I think DAX will remain subject to what's happening in the world. Look, we had some economic data this week from Europe. We got some inflation numbers. Where's that Wednesday? Oh no, I'm looking at the wrong week actually. So Thursday was, I think. Yeah, there we go. So we had the interest rate decision from the UK, but Wednesday we got the inflation numbers from UK and EU. And look at this inflation year-on-year final 1.9 came out as expected. Look, I said before, the European data doesn't really disappoint much when it comes to forecasts. Most of the time it's bang on. But UK data here, inflation year-on-year came out on a little bit lower side. So we're seeing this little stalling moment right now. Anyway, and that's where it leads me to the FTSE 100 very quickly. So this one is very, very close to the all-time high. Look, last week we almost managed to hit the new all-time high, and we kind of failed to do so. So I'm not giving up. I'm still saying this, that even if we do retrace lower at some point anywhere, as long as we stay anywhere above the 50-day EMA, I'm still bullish. If we start falling below the 50-day EMA, I'll consider a little bit of a move to the downside. Let's jump into, I think I went through a lot of information with the indices, but hey, there's a lot to cover this week. I mean, this is crazy. And in general, by the way, in terms of, this is what I'm saying, you don't know where to stop here, because we also had the interest rate decision by the UK. Where's that interest rate decision? Where's that Bank of England? There we go. So the Bank of England kept their interest rate the same at 4.25, but there was a shift in MPC voting because the people who were the members who were against, who were for to keep the rates unchanged, there was one less than forecasted at 7, but still higher than previous. So yes, there is a little bit of a shift in there that maybe we could see a lower rate going further. But again, I think that inflation numbers will dictate, so we need to keep an eye on those. My problem with the UK, the Bank of England, is that I think that they will continue cutting, because again, they have a problem with unemployment. It's rising. So yes, inflation is one thing, so they're happy to see, slowing down inflation. But again, it becomes a bit of a pickle for them, where going into next month, we're expecting higher inflation because of oil. Again, theoretically, but if unemployment starts picking up again further, then they will have to go and cut rates. Let's see if that's going to be the case. Ladies and gentlemen, let's jump into the Forex world. AUDUSD, so far so good. Look, I talked about this. I will say again the same thing, that we are still moving higher. We're above all my EMAs on the daily chart. That's great, but we're also in this little formation. It's not a channel. It's more of somewhat of a rising wedge, to be honest. But according to all the TIA rules, such patterns tend to break to the downside. However, we're in no rush at all. If we do break below all my EMAs here, then I'm going to go to the downside. At this point, I'm just observing the price action. I'm kind of cautiously leaning towards the upside still, because again, while we remain inside the pattern, the trend is to the upside. AUDJPY, my beloved risk on, risk off monitor pair. So we are seeing here a push, or should I say not a push, actually more of a holding on moment, and it seems like it's still positive. And I don't want to say that I'm very bearish here, no, because, well, what did I do? Just a second, there we go. I'm still somewhat positive, so that means that I'm still somewhat positive with the economic outlook in general. I think that the equities could still push higher a little bit, but I need some confirmation here on the AUDJPY side. I need to push somewhere above this 95.74 territory, which is around here, which is a good barrier. And of course, you can keep an eye on the 200-day EMA. But if for those who are very much in a impatient mode, well, you can keep an eye on this little formation, what's happening here. Look at this. It could be like a nice bullish flag here. Let me just see if on the 4-hour chart it makes sense. Kind of ish. But on the 4-hour chart, it looks more somewhat like a, I would say, inverted head and shoulders pattern, you know, but either way, a pop above this barrier here, above this 94.74, 75 zone is needed. NZD, NZD USD drifting back up here, so holding on to the slight weakness of the US dollar because it weakened, because I think that the market understood that if you know, the US intervenes in there militarily, then we could see the dollar pushing higher, and that's not very good for, I think, that what the White House is trying to achieve, you know, where to make it their US exports more attractive and make other country exports more or less attractive, more expensive. So, you know, by kind of having this nice trade where, let's say, for example, euro, with the pound, with the Japanese yen, where those currencies are on the stronger side against the US, so that it would become less attractive for the US consumer to purchase goods from abroad. So they want to keep the US dollar lower a little bit right now. Also, you know, need to kind of provide military to one country which is bombing now, which is conducting bombing, and that's you know, who started bombing, who started it in a way. You know, they need to purchase cheaper the military equipment, so you know, that's all favorable for and at the moment, and the lower US dollar is kind of helping out here. So I think that there could still be a chance for, let's say, pairs like NZD-USD to push higher, AUD-USD to push higher, EURO-USD to push higher, and so on and so on. But I'll get to Euro-USD in a bit. USDJPY, we broke the downside line here. That's great. So for now I am leaning towards the upside. And to be honest, we're seeing a little bit of weakness on the Japanese front, on the Japanese yen front, and this is where look, the BOJ of course is keeping a close eye on this, but this is not still something to worry about. This is just normal, natural movement here, and it seems like we could see a push higher here. Maybe it's not because of the super strength of the US dollar, but more of a weakness in the Japanese yen, because people would be shifting their attention more towards the equities now, and nobody wants the safe havens at this point. So why not to shift, like I said, why not to shift a little bit to the upside here? We'll go from there, of course. USDCAD pushing back up because again, oil has kind of slid back down a little bit. However, it's starting to pick up again, so it's a little bit of a roller coaster ride, and I think this is where USDCAD could remain in too as well. It could remain in that roller coaster ride. So for now, we're just observing the price action, and I'm cautiously leaning towards the upside. USDCHF, well, this one I'm very conservative. I'm waiting for a clearance of this downside line if I want to go higher, and I'm waiting for a clearance of the 0.8038 zone if I want to go lower. Excuse me. Because all this area right here, it's very unclear, and to be honest, not to my liking, so I'm just gonna observe the price action. EURUSD very quickly. Look, I talked about this yesterday in one of the videos, and basically you can find those on it was on, I think, on YouTube, not on TradingView, but it was on YouTube, and basically I talked about the central banks. So my issue here is that, look, we drifted. I said yesterday that we're still remain in this rising channel. So but for me, I mean, I was saying yesterday, this breakout, this move to the downside, but I need to see a drop below the 1.1454 territory in order to consider lower levels, or at least a move towards the 50-day EMA, but we're not getting that. So I'm kind of, you know, cautiously bullish. And if we do push above the 1.1573 territory right there, then yes, we're now back in the game. We could aim for the upper side of this rising channel. GBPUSD, very quickly, we had a recovery moment here. Yes, like I said, the market is taking positively the US kind of backing off a little bit, which is a good thing in my opinion. And we're seeing this nice push back up. So the market is kind of now back into normal game plan, unless we start falling below this 50-day EMA. But for me, the downside scenario is in a break of this this upside line taken from the lowest point of January of 2025, of basically the lowest point of the current lowest point of this year. If we do clear this, and we at the same time we would clear the 23.6, and that's where more sellers here could join in. Let's jump into the commodity world. Gold looking good here, looking good. And for now, everything is kind of in line, to be honest. I mean, I was talking about this. I said in the beginning of this week, I said that look, if this holds, if this 3,430 zone holds, we could see a drift lower. We could see something of a nice formation here. And let me get to this point in a bit. So basically right now we're breaking this steeper upside line. That's fine. We can actually get rid of it. So it did its job. And to be honest, now I'm going to lean towards the downside. I'm going to remain bearish, and I'm going to aim for that 50-day EMA together with this upside line taken from the low of the 7th of April. Now, all this looks like a nice little ascending triangle pattern, which means that there is a good chance for this one to break out to the upside later on. But for that, we need to see a pop above the 3,430 zone-ish. Again, it's a little bit on the lower side. Maybe you have a little bit of a higher level, like 3,440, something like that. You're also right. But you know what? For me personally, I decided that I will stick to this 3,430. If we start clearing down, I'm going to aim higher. At the moment, we're seeing a decline. That's all fine. I think that we could see more downside here, and I'm going to keep an eye on this upside line together with this 50-day EMA, and then we'll take it from there. Maybe we'll rebound, we'll form this ascending triangle, or maybe we're not. Maybe we're going to break this upside line. If we do that, then I'm aiming for the 100-day EMA right there, which could coincide with the lower side of this possible range. And then we'll take it from there. If it is a range, then we could see a slightly more prolonged period from where gold could move higher or lower. We could see this moving sideways moment, and then we look at, of course, the prevailing trend. The prevailing trend is to the upside, so greater chance for this one to become positive rather than negative. But again, anything can happen. Maybe it will form something like a double or like triple top pattern here, and so on. And we're gonna drop lower here. So that's why I am at the moment in no rush at all. But yeah, of course, if suddenly tensions resume, then yes, we could see. If suddenly U.S. involvement rhetoric kind of comes back to the headlines, then yes, we could see a reversal back up here. Let's jump into silver. So yep, doing the same thing. Silver retracing, which is fine. That's absolutely good. I think that I'm going to lean still a little bit more towards the downside. And yep, if we do drop below the 35.44 zone right there, I'm going to aim for the this downside line and this 50-day EMA. Palladium, very quickly, nothing major happening here. Platinum, yep. Platinum futures, yep, also a little bit of a decline. Copper, let's have a look at this one, also a little bit on decline. Now, oil. So as you can see here, it stalled. It stalled near a key area of resistance. Look at this downside line taken from the highest point of September of 2023. We are stalling. Yes, we have pierced it through a few times, but in general, we are stalling. So I said it before, look, if this holds, I'm actually a bear still. I'm still bear on oil, honestly. Like, I mean, even with everything what's happening, I'm still a bear on oil because we do have supply. We don't really have much demand because demand has been shaken. but we do have supply, and that's why oil could, you know, drift back down at the moment, unless it gets these, you know, occasional shocks where somebody's like prepared to bomb someone, and you know, that's what we get. Or let's say if there is a threat to close a canal or like a strait or something like that, then yeah, you get these shocks, but I think they could be short-lived, because people will understand that demand could fall. We have supply of oil, so you know, how you can justify higher prices, I don't know, unless it's just, like I said, pure speculation. Natural gas pushing beautifully, breaking out higher. I talked about this 3.83 zone. I talked about it on Monday, and yeah, there we go. We got the breakout. So I'm leaning towards the 4.25 zone, and then I'll take it from there. Coffee, ladies and gentlemen, coffee brilliantly moving to the downside. It fell below the 200-day EMA, and now the question is, where's our next target? Well, basically, I'm going to aim for this little area right here, the 290. Of course, first it'll be the psychological 300 zone, but 313 looks actually attractive as well. Let's see what's going to happen here. Wheat beautifully pushing to the upside, and yep, wheat is at an interesting spot here. We are testing this area, the highest point of October of 2024, the highest point of February of 2025. So we're drawing a trend line here, and I think that this becomes quite a nice, good target. Let's see there. It's around the 600 psychological 600 zone. Could be a nice move here higher. Sugar, let's have a look at sugar. It rebounded beautifully from my 15.87 territory, and that level was back here. Let me show you. That was the highest point of February of 2020. There we go. Beautiful rebound. Hey, let's see if we can push back up here. But let's not forget that we are in a possible falling channel. Is that correct? Let me just reuse this line. Let me just do that very quickly. Yep. There we go. So basically something like this. So we're in a falling channel. So if we do break the upper side of the falling channel, yep, I will consider a move higher. So let me just grab this arrow and drag it all the way here. Honestly, very interesting developments here. I think that this could be an interesting one to watch if we do break the upper side of the falling channel. Cotton, my beloved cotton. Ooh, look at this. So, tensions, of course, geopolitical tensions are okay, this is an interesting one. So basically, I need to look into this a little bit more, because I'm just trying to find logic here, you know, why we have this major jump like this, because maybe, like I said, I might be missing something. This is something that I'm looking at the first time, and it's quite interesting, so I think I need to do a little bit of research on this one, because, look, I'm just coming from the logical side. If the US is one of the biggest producers of cotton, and it's selling its stuff to Asia in a way, because Asians are producing clothes. So and now given the tensions, and if let's say Pakistan and Iran have been one of those countries that were producing clothing, if those, let's say, slow down their purchases of, maybe that's because then this could lead to a drop in production in Iran and Pakistan. So hey, could be an issue, could be an interesting one to keep an eye on. Let's see. Again, I need to dig into this. Don't take my word at this point on this, because I'm just trying to go from the logical side. And maybe, like I said, maybe there's some issues in there, so I need to look into this myself. So, but it's an interesting one. Maybe you wanna, if you are interested in this, do your research as well. Maybe then you can actually comment in the box in there and give your perspective. And very quickly on the dessert side, the crypto world. Look. We stayed above. I removed everything, and I'm just gonna keep a few levels on the chart. To be honest, I think this just makes sense. So this is my game plan for the upside and for the downside. Pretty straightforward. If we do continue to trade above the 50-day EMA, then I need to see a push above the current all-time high, and then I'll go higher. While we are trading here, I really don't care. I'm just observing the price action. So my conservative approach here to the upside is from the current all-time high, period. For the downside, I would like to see a drop below the 100 psychological 100 zone. At the same time, we could see a drop below the 100-day EMA here, and all the stars could align perfectly. Bitcoin Cash had a good run, 485 tick, and then the 500 zone. Did we reach that 500 zone? Just fell shy, but I think that that's it. So this is where I think that we reached our target. The 500 territory was almost reached. We'll take that. I think that there could be a little bit of a retracement unless we break the 500 zone. But looking at this picture, look, if we do clear the 500 psychological 500 territory, I will go a little bit higher. I will go towards maybe just somewhere around here. Yep, the 563 territory, and then I'll go from there, because again, we have these levels here, but let's not rush into things. Ethereum is stuck a little bit, and yep, I think that this is working out so far well. My upside scenario remains from the same area, despite we violated it. But if you look on the weekly, I think that this is a much better visual here, because look at this false breakout. I mean, this is just spectacular. So we just remain in the range basically, and we're waiting for the next catalyst to drive this one out of this range, and at the moment we're chilling. Ripple is still remains below the 50 and the 100-day EMA, but still above the 200-day EMA. So in a way, we are stuck here. And you know what I'm gonna do? I'm gonna keep an eye on this little hurdle, actually, the 2,300 and 2.3350-ish zone. If we do clear this, I will go to the upside. I will go towards the 2.65 zone right there, and then we'll take it from there. If we do fall below the 2.0570 zone somewhere there, then yes, I'll consider a move lower here. But I would need to see a drop below the 200-day EMA, and then we'll go from there. Litecoin, there we go. So we cleared the upper side of this falling channel, but actually we kind of we didn't really respect it that much, to be honest. That's why, you know what, I'm gonna remove everything and just have a fresh look. And I think that this is much better, because look, for the upside, keep your eyes on this 93 or 94 zone ish, and the EMAs here as well, because if those if we do clear those, then yep, the next target could be the 106.60, and we'll take it from there. 81 territory on the downside, that's what I'm looking at. If we can clear that zone, I will go to the downside. Pretty straightforward here. Yep, I think that seems to be quite logical. Dogecoin, very quickly, Dogecoin still stuck. I need a clearance of one of these trend lines in order to do anything. Polkadot continues to slide beautifully. There we go. We are traveling towards my 3.2122 zone. Ooh, that's going to be interesting. And if we do reach this area, then the question is, can we create a new low? Which basically, let me just double check. Is this the... yeah, that would be a new low, lowest low here. There we go. That would be interesting on Polkadot. Look, if we do drop below 3.22, I mean, that is spectacular. That could be a, let me just double check. Wait, actually, is this, no, yeah, let me just double check. Maybe there's a trading view chart with more history. Right, that's not the lowest point. There we go. Okay, we started off in here where the dinosaur begins here. Let me just double check this. 1.36. That's where we started off. So this is not the lowest low, but it has been the lowest number in decades. Well, decades. I mean, it only started in 2020, but not decades, years. So yeah, this is, like I said, this is quite interesting, to be honest, because if this drops below 3.25 zone, 25 zone, well, that's like I said, that is quite a move. But again, let's not rush into those. Let's not get those bears excited yet, or make the bulls worry too much. But let's keep an eye on this little territory, this 3.22 actually here on my chart. So yes, and then we'll take it from there. And finally, Tron, also still holding on, still trying to hold on for above the EMAs here on the above the 50-day EMA. Look at this, how comfortably it's sitting there, but it's struggling to move higher. It's struggling to push above the 0.2686 territory. So if we can get that move, a nice move above this area, I will go to the upside. For the downside for me, look, I will start looking at some lower levels if we do fall below the 50-day EMA, and then I'll aim for the 100-day EMA, and then this is the area, this 0.2570 zone is the area that I'm watching very carefully. If we clear that, I'm going to lean a little bit more towards the downside. Ladies and gentlemen, and that is a wrap for this week. Ladies and gentlemen, I hope you found it useful. Thank you very much for watching and listening. I really appreciate that. Look, like I said, I tried to cover this week as a lot of things. Like I said, the central banks were taking the center stage. They were taking the spotlight, in my opinion, but quietly. This was like one of those, they were, the news there was overshadowed by geopolitical tensions. However, to say that the news of the central banks, that with all the interest rate decisions, everything, these were like insignificant, no. Although we already knew what's going to happen, still the market, I think, is getting a little bit of a more clear picture of what's happening and how these, how the banks are positioning themselves going further. And I think that the market is now liking that in a way. Yeah, because I think everybody was hoping to see, like, if, the central banks will kind of maybe bow down to, or maybe I'm talking about a specific one central bank, if they're going to bow down to the government. But it seemed like it kind of did and it did not. So, but still, such an approach, it's interesting for us market participants, how to proceed further. Yep. Like I said, to me, it was clear, and I get it, and let's see how this will go further. Of course, like I said, next week we have another full week of June trading, so let's join me on let's connect on everywhere, on all social platforms. Yep, join us on YouTube, join us on TradingView, everywhere. And if you want to get in touch with me, like I said, you can always message me on LinkedIn. I'll be more than happy to talk. But if you're trying to connect, just connect, I might not accept the invitation unless you actually write something and introduce yourself. But anyway, ladies and gentlemen, thank you very much, and I'll see you on Monday, 7 o'clock GMT time, the usual. Bye bye.